Hey everybody, well, it is fitting, it seems, for a joke of a quarter to end with a joke of a day. Don't get me wrong, I'm not bitter. I had a good day. I had a nice profit on both my accounts today. All my positions are in the green, even though they're all bearish. And I'm feeling in sync again with the market, which is a great feeling. But we had this laughable nonsense happen. This Powell's speech actually depressed the market because he didn't say dick, but the ES rallied from around 57, 56 up to 60 points higher than that. It just had this explosive rally based on absolutely nothing except the fact that the calendar is going to change. If I were bolder and weren't loading shish kebab while the market was closing, I would have gobbled up like ultra short instruments like the QID or the SDS, stuff like that, right at the closing bell, because this is just plain dumb, and I've got a feeling it's going to fade. But I didn't do any of that stuff. It was, as I said, a good day, a lousy quarter, and I'm glad this quarter's behind us. I think we can all put to bed the notion of September is a really bearish month. You know, I guess maybe over the past century you could calculate that, but this is a very perverted, distorted market right now, and the old rules just don't apply anymore. Perma bears like Zero Hedge are going to trot out what a good month October is. Count on it. But I'm remaining in position. As I said during my rather saucy post on Sunday, I ain't going nowhere. So this is the ES over the course of the year. And of course we had our rally up to end of March. So basically Q1 was just straight up. We started to diminish, but of course our friends in the government aren't going to permit that for very long. So after a couple of weeks of that silliness, they said bye, and everything started going crazy again to the upside. And then the tech stocks basically peaked in mid-July, and the peaks remain pretty much across the board. Then we had our even crueler tumble, which fell hard principally over the course of 2 days, really just August 1st and 2nd. That was the meat of it. And that terminated, because the government's not going to tolerate that very long either, on August 5th, like right at the opening bell. Then we exploded higher, did a little of the tease to the bears. Market's very cruel to the bears this year. And then up we go to lifetime highs last week. And this was based upon, of course, China dumping money into the market to preserve their grip on power. The dictatorship, the communist dictatorship in China, does not want any unrest amongst the masses, and they will happily print till the cows come home to shut those minions up so they can hold on to their power. So that worked for a while. And as I've mentioned earlier today, I took advantage of that by buying puts on Chinese stocks like JD, like PDD. And the Chinese stock market is closed for a week, which I'm glad for many reasons. I'm not in China, but that's one of them. I'd go crazy without trading for a whole week. So it'd be kind of interesting to see how Chinese stocks behave when there is no Chinese market. I guess they'll be sort of just proxies in the meantime and sort of ape United States stocks behavior, I can only suppose. But the red line here isn't like crazy meaningful, except in as much as it represents the prior lifetime high. And it's a little interesting how we're sort of bobbling around that right now. See, it's just a little bit unsure of itself at these levels. But long and short of it is that we closed at or near lifetime highs on a lot of different indexes at the end of the quarter. And it's been a completely grotesque quarter and year. And it's been basically straight up since the fabled October 13, 2022 bottom. As far as the NQ goes, a little bit of a different critter, as I intimated there. In this instance, we did peak back in July. This is a pretty inscrutable pattern, except in as much as there's kind of a wedge going on here. Support being along here and resistance being up here. It's not pretty enough for me to bother drawing out. But you know, this to me seems quite prone to leading the way down. And as far as the RTY goes, I've left a Fibonacci up on this one because it's mildly interesting and not a terrible job of bounding the zones of support and resistance. But as it is here, we just, talk about no direction, just zippo. In terms of gold, we got a drop today a little bit. I've been anticipating that. I've said it a billion times. I'll say again, I'm bullish on gold long term. Short term, I think it's, gone a little too far, a little too fast. So we have been easing back on them since the 2,700 plus peak last Thursday. As far as copper goes, which I normally don't think about too much, but this has been slavishly following along with China. We had a mega pop on this Sunday, as we did on FXI. I mean, copper and the Chinese market basically one and the same. It's a very strange thing. It's as if it's like all China sells is copper. That all their economy is completely based on copper, which of course is not the case, but it sure acts that way. I mean, these are almost indistinguishable. Copper, Chinese market, copper, Chinese market. I think you get the idea. But it didn't last because, as you can see, I don't know what poor slob paid $35.50 for FXI, but they're already down like 10% or something like that. As I say, I'm enthusiastic about being able to go bearish on Chinese stocks, which I never really bothered thinking about beforehand. Finally, as far as the VIX goes, of course, the VIX has been smothered in its crib, but I think we've got a real opportunity here to at least beat the low we had seen on, the high we'd seen on 9.6. It peaked at 23.76. This whole shtick about, endlessly lower prices on the VIX, we seem to have broken the back on this with that early August mega rally on the VIX. Because as you can see, for years it was just like lower high, lower high, lower high, lower high, lower high. Screw you! Stop putting into that right quick. And so I'm hoping that this, and I don't know if this data is legit, but we'll assume it is 10.62. We'll assume that is the preposterous low for this entire run, and that we can look forward to lower 20s maybe, which used to be like the norm, but now it's like, oh my God, do QE, we've got a VIX at 21, They should do that at 100, not in the lower 20s. But I'll wrap it up here. Glad the quarter's over. Glad that had a good day, and I really think this crazy final 90-minute rally we saw is going to be a flash in the pan. So thanks a lot. See you later.